All right. Hello, everybody. Try to get us started right on time for trying to figure it all out so that YouTube goes live right at 2:30 my time, 5:30 Eastern. I know we always talk about trying to keep to 35 or 30 to 45 minutes, and I know the little delay and all that doesn't help keep us on track. So trying to do better at that. Anyway, welcome into this will be our last AI circle for the month of August. Our next one, I can just get it out of the way. We're going to miss next week, and then we will be back on September 3rd for our next one. So right now we're on about a every other week type of trajectory. So with a little bit of that being said, I don't see a ton of people in here yet, so maybe we'll give them a second. If someone in the chat just could tell me that the audio's all good and that we are actually streaming, which I'm sure we are, but you never know. All right, cool. A couple more coming in. Well, let's get Kelly in here and get this show on the road. Kelly, how are you?
Oh, everybody, Lee and everybody else, tired. It's we are literally in the middle of August. The heat is crazy in Arizona, but it seems to be relaxing a little bit, and we are dead center in the middle of the sell in May and go away. But right now, this since May, if you did that, we got a little summer rally going on since the end of May, or sorry, the beginning of May. And so generally, all things are kind of going well on the market side. I'm just physically tired, and I want Labor Day to come. Get a change going.
You're doing a bunch right before we popped this thing into live. So we thank you for a little bit of your time this afternoon. I'll just knock this out of the way, and it looks like a couple people in the chat were saying that everything sounds good. So thank you guys for chiming in. As always, so obviously, or maybe not obviously, if you don't know, iFlip, we're a software company. So we always start this out with a disclaimer, like we're not here to give financial advice or anything around that. Kelly and I will sometimes give our opinions on things and just take it for that. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure the iFlip Smartfolios you select are suitable for your investment profile before trading in a live brokerage account. Boom, that part's out of the way, and we're already getting questions. Awesome. With that being said, I do see a question from Bobby, and I won't get to it right this second. But as always, it is best if we can get your questions in as soon as possible. That way we make sure we have time to answer them. I actually got a couple really good ones on calls today. So if we're begging for questions, I have a few teed up on my own, but hoping you guys have some that we can answer live for you as well. And for anyone who's maybe joining us for the first time, this is our typical agenda. Kelly's going to spend some time talking about the market, give us anything that he finds insightful or interesting. Sometimes there are trades for us to talk about that our AI has made. Sometimes there's not. And then I would say a combination of the first one or the third bullet point there is the reason that people come. They either want their questions answered or they want to hear from Kelly himself. So Kelly, I think I'm done talking. I will let you get a screen going. I know what was that? A whopping like 2 minutes. It's a lot. Let me switch over to here. And I think I said it last time, but with the new platform here, I can play with a few things. So trying a few things out, like you were in the bottom left corner this time instead of bottom right, so people can see prices on your little screen share here, if it makes any difference. If not, it's all good.
Okay.
Kelly, take it away.
I will do that. Thank you, Lee. It's nice to have it back. Thank you for giving it back to me, the con. So now I can steer the submarine.
You do that.
If I freeze up, someone let me know. Just so you know, Mr. Gonzalez, I will help answer that question on dividends after we go through my little update. So look, everybody, as you know, for all those that are out there, over the last 4 sessions, which ultimately is about more than 2 months ago, it seems, the market has done exactly what we've talked about, which is it has melted higher. I'll just go to the S&P. Since we've been talking about this towards the middle of June, the market's gone from around 6,000 to 6,400. That's almost an increase of about 7%. That's called a melt up over the last 8 weeks or so in the market. We've finally got what feels like a correction, and the S&P has fallen about 2% off of its high. And the same kind of thing is true of the NASDAQ. It has fallen off its high as well, maybe by 3%. These look like corrections to me and nothing more. These are probably buying dips. Matter of fact, you might have saw a little of that today. If I zoom in, you can see the market actually tried to make a new low, but it actually bounced off of its low and closed towards the highs of the day. This is something indicative of this deep buying that's going on in the market. Any dip right now is being bought with the anticipation that it is an opportunity. We'll see that see if that remains to be true after Labor Day, which is early in September this year. So the Dow is just literally on its highs, off 0.5%. The S&P 500 is off about 1.5%. NASDAQ is off maybe 2.5% at the most. You can see it's a small little dip. The markets move around a lot. Look at, the NASDAQ is mostly tech orientated. Here's the Mag 7 here, and all of these stocks basically have rallied. Here's rally. Apple finally started to catch up. Amazon, I liked it on the dip. It seems to be falling back a little today, but it doesn't mean that much because it was actually trying to push up to its high. Google, again, closer to its highs. Meta, same thing. I mean, it comes off. These probably are buying opportunities. NVIDIA down, but again, it was down much more early in the day. It bounced back. I don't really know what to say. The market looks like it still wants to go higher. If we look at the bonds, there's nothing to look at. As I pointed out, I don't really see that this is anything to talk about. The interest rates on the 10-year notes sit at about 4.29, 4.3%, and that is moving absolutely all of nowhere, which means that the market, even though Fed funds are anticipating the cut for September, I thought it would be 50 basis points. It's now leaning towards 25. And you can tell there is a battle within the Fed right now. Now we'll have more than a split Fed with 3 people that believe we should cut and the Fed chair being challenged. So we have that going on. The energy markets, again, we have lower energy costs in general around the country. I don't think anybody can deny that. That has not translated yet into some market difference in some of the inflationary numbers. And we should talk about that real quick. This week, we've already had CPI and PPI. Those are the 2 numbers that have caused the correction. And I think it was PPI was last Friday. And so when we see these numbers come out, they were running hot. So there's the case for, no interest rate cut. We won't cut because inflation looks like it's picking up. But the reality is that is more than likely the tariff. So the tariffs were put out in early April. Money has been collected from the tariffs, but so many extensions were given, and that's why the markets rallied back. And the reality is that tariffs, no matter how anybody likes it, if you go to economics class, and I have been to a few, but I will admit they've been over 40 years ago that I went to them, that tariffs are inflationary. And we probably see that, especially in the PPI number, somewhat, and that's maybe why we had the one hot number. my expectations for next month's PPI and CPI are to remain flat, which means the year over year would be higher, but the inflationary numbers over month will be flat. So we saw that tick up in inflation, and I think we can account for that with the tariffs becoming valid in early April. So we'll see if I'm right about that, and we will find out sometime in September. The rest of the other thing to note, and I think is kind of important, is let's look at the dollar. Let's not forget that. The dollar is also steadied. It has come off its highs from 110 or so all the way down to 98. So it's off about 10% from the beginning of the year. However, that being said, it is now starting to run inside of its range. And remember, currencies are generally designed to trade within a range so we can manage expectations of worldwide trade. And that makes a ton of sense now, given the tariff threat around the world. Speaking of currencies, let's jump real quick over to cryptocurrencies. I'll go to the IBIT, which is the proxy for Bitcoin. Again, we did make a new high and had a new high closing, at least on the stock, of 69.83, I think it was, for IBIT. And since then, it has backed off from 70 to that, about 8%. But again, it is hanging in at this higher level. And this kind of looks to me like we're trying to coil again to go higher. So I look at these things as opportunistic, frankly, at this point. So that's the cryptocurrencies have also been a little bit mundane, but they are making new highs. And from the beginning of the year, the cryptocurrencies are up approximately 30% again. So we cannot deny what's going on there. So energy markets, I think we saw they're basically flat. We are getting lower energy prices, but here's a chart of the oil prices. We're at about $62, $63 a barrel. That's the lowest I've seen, except since the announcement of the tariffs. So it's pretty steady on the oil front, not much going on there. My two favorites are just languishing at around $17.50 a piece. And again, I'm expecting them to go back up and make to the old highs and actually make new highs over the course of the next year or so. New highs meaning enough that's a valuable trade. If we look at the banking sector, again, JP Morgan and almost everything are just barely off their highs. Here's Bank of America, almost on its high. Goldman actually had a little bit of a correction, but man, when I look at these corrections, I can tell you they don't look deep at all. They look like a small, like a paper cut, and the market still just wants to be bought. If we go to the overall blends of stocks that we all have in our portfolios, here's Carnival Cruise Lines. It is not, it tries to hit 30 and it backs off all of 50, 60 cents, which is just 2%. So nothing really to talk about there. And they have come up a long way since the beginning of the year. These things are up literally approximately $7 on $22. I mean, wow, that's literally 30%. The other stocks that I have really high hopes for this year, and they generally do well, especially in the fourth quarter, as you can see last year over here, are the Land Bridge and Texas Pacific Land. I like both stocks. However, they have not been kind. And the case of some of these things is that they offer the infrastructure for data centers. They are working online to build these things, but we have not seen that reflected in the price. Hopefully, we're coiling to make a move higher in the fourth quarter, which of course begins in October. But I'm really interested to see September and what happens after Labor Day. Here's something that has corrected: CrowdStrike. Great company. There's a couple of companies that do internet security, but CrowdStrike was at $520 literally 2 months ago, and now it's at $420. So that's $100 off. So that's a 20% correction, and it's right now actually on its 200-day moving average. As a trader, I would buy that. I would buy this price and try to defend the 200-day moving average as a trader. We do own it. I still think in our portfolios, probably close to a stop. But again, this is, to me, looks like a very good setup if I was a trader in that world. If we go to the other stocks, like let's look at Planetary. Here's another stock that is corrected. But look at the move today, actually, and I just saw this myself. I saw Planetary down literally $12 earlier in the day, and it closes on its high. But nonetheless, Planetary, a stock that has done nothing but go up, is 187. It's off $30, so that's almost 20% as well. This here very likely could be a buying opportunity to defend that low if I was a trader again. And remember, on the AI Circle, I speak as if I'm trading, although albeit I don't give recommendations, because trading is very, very specific and short term. Other things I see that are of interest, there's a few stocks I keep an eye on. I saw Costco today. Here's Costco. Again, it made a correction, but it looks like the correction's over. It actually had a small little breakout here. I wouldn't be surprised to see Costco go up another $50, $60, $70 from here. Here's an interesting stock that I just started to follow it. Why? Because it's boring, but it pays 7.5%. Interesting. For one reason or another, I started to look at it. Most of the lifetime of UPS, which is the single largest shipper in America, has always sat around this price, somewhere in the, about $100 a share, anywhere from $100 a share, give or take $5. We're at $86, $87 a share right now, and it's paying 7.5%. And it's been a consistent dividend payer for years. We all know the business model. We all know Federal Express has made inroads. We all know that Amazon uses its own trucks much more than UPS these days. But UPS actually refuses a lot of that business because they don't make any money on it. Keeps their drivers employed, but that's about it. But at $86 a share, again, it's kind of attractive because there's probably about 12% on the upside on the stock back to 100, and you get 7.5% in the meantime. So it's a very good dividend play over time. It could be actually a stalwart inside of a lot of conservative portfolios, and I may look to add that. The only other thing I could probably add today is that and this is also for Lee as well, that there will be some more Smartfolios coming out. Again, we mentioned that the last AI Circle, but we will have a high yield covered call Smartfolio. And I will talk to that at some point once it's offered. But what I've noticed on the covered calls is I experimented it myself personally. By buying some of these stocks, a group of 4 stocks, and I bought them in January. And here's the key. Each of these covered calls are paying about 1% a month, and some a little more. Some of them are covered calls in Bitcoin. And I noticed that in all 4 stocks, I lost money on a price basis. But since they pay their dividends every week or every 2 weeks, I've noticed that the money I made in dividends minus the money I lost in price, I've still made 7.5% over the 6 months. So the idea is for those that have some risk tolerance but are looking for money, that we may have a Smartfolio that could be of interest to just pay dividends and offer as much as 15% a year on these particular covered call ETFs. So these ETFs are generally managed by people that know how to write options. They are buy writers. It is something that I've done myself for many years. And the concept is to make money just on the decay of options. You own the stock, you sell a call above it, and the call expires worthless, you make some extra money. If the call expires with a value, you make you lock in a certain profit gain, and then you just simply buy the underlying back once they take the stock away from you. So this is always an interesting thing, especially for those on fixed income. It could look attractive because the overall yield on the experimental basis was just $50,000, made 7.5%, which I'll take 7.5% on my money, and I mean literally in 6 months I made 7.5%. So if I made 50, about 75, sorry, 70. Sorry, everyone. I made $7,500 on 50,000 in 6 months. Good numbers. And by the way, to answer Mr. Gonzalez's question earlier, when we do make a dividend, we are not a mutual fund. Which a mutual fund, when they have dividends are paid, mutual funds always reinvest all spare cash. They don't return cash. But most people understand that when you make a dividend, it becomes cash in your account. And then that account, whether you're at Charles Schwab or Fidelity, it goes into your cash account. And then it's up to you to reinvest it. So we are working on a button that we will say, hey, invest all dividends back into the stocks that the dividends came from. But currently, no. When you get a cash dividend, it just becomes cash. And it's up to you to either pull the cash from your account or reinvest manually the cash back into whatever you wish to invest it in. But I will say that we are working on a button to allow users to say, yes, reinvest dividends into the stocks that issued them. So it is a feature that we will add in the future, and it'll allow users to do what they wish with their cash dividends. And after that, Lee, we can probably go to some questions.
Yeah. I was just going to clarify, and I need to do a better job on my end of this too. I always thought that the dividends in the Smartfolios would just be added to the cash inside of that Smartfolio, so that when the AI wants to reinvest, that, and obviously for some people it's a couple bucks, some people it could be hundreds of dollars. What I do know for a fact though, and Bobby, this isn't Bobby's question per se, but say you bought Kelly was just talking about UPS. Say you bought UPS manually, those dividends you'd see them in your buying power, which is just your cash in the account. The Smartfolio, it takes it a step further. So it's kind of in a middle ground, I guess, between the button Kelly's talking about and buying something manually.
To add to that one with Smartfolios, yes, a Smartfolio, if a dividend comes into one of those, it does become free cash. And then periodically, Smartfolios will look to see how they're balanced and look at any free cash and then say, okay, let's take those free cash and then buy whatever stock might be underbalanced at some point in the future. But that will only happen periodically during rebalancing. So rebalancing is typically done by most investment managers towards the end of the year, generally November. That's generally when rebalancing occurs, where for example, in stocks that are losers are sold, cash is raised, and then cash is reinvested back into the stocks that might have performed in other ways to rebalance the account. So in the flip case, Lee is correct that periodically those dividends could be reinvested, but only when the rebalancing occurs, it won't happen monthly.
Yeah. And then the second part of Bobby's question, will there ever be a feature where you can make automatic contributions to more than one portfolio? For instance, like setting a percentage. Personally, I would love that.
Yeah, that's a good idea.
So, and we've talked about it before. I don't want to volunteer our team to do something that I want, but I would expect that'd be something we can do sometime down the road. Because I just think, if you don't want your reoccurring deposits to go into your core strategy, which my personal opinion is still a good one, I prefer to seize the majority of someone's money in those core strategies and then use the additive ones as like I don't know, like a side if you're talking about a dinner meal or something like that. But it makes you take one extra step. If you want to go by BitFlip on a recurring basis, you manually have to intervene right now on that. So I think there's definitely something there, Bobby. Catherine had the next question. How do I tell how much cash I have to invest? And when I invest into a Smartfolio, I just need to use the amount that it says I have available, correct? I can spread it across various portfolios. Yeah, let me see if I can get the screen share.
I have a good question.
I did this last week and it seemed to be helpful for people. All right, Kelly, I'm assuming you can see my screen. Is that right?
I can.
Cool. So first things first, the cash that you have available to invest is going to be this buying power section. So in this one, there's 0, but if you had, a new deposit that came over, say it was $1,000, 10,000, whatever it was, you would see it right here. You can either take that money and put it all into one, like say balanced in this case. Just note that each portfolio has a $500 minimum. Of course, you're welcome to put much more than that in there, but that is the absolute minimum. So maybe you had 10 grand and you're like, I want to put 5 into balanced and 5 into something else, or 2,500 into 2 of these. You can split it up however you would like to. So in a roundabout way to answer your question, you can put it all into one. You can also split it up how you see fit as well. Anything you wanted to add to that, Kelly?
Can't add anything to that.
What do you think about my opinion on the, I give the analogy of, dinner, like, okay, you get a steak as your main course and then maybe a side of mashed potatoes and all that.
I don't know if I like the food
besides making you hungry.
Yeah, because of that reason. I mean, with buying power, the basic reference to that, I might go off a little bit on a tangent. Personally, I like dividends to go to cash. This is my personal thinking, because a dividend is something that's very real, and it depends on if I really want to reinvest the money. Generally, when a dividend is paid, do I really want to reinvest that money? I'm not so sure. I don't know if I want to reinvest that money in that stock at that time. So I prefer the cash, giving me the option to say, personally, hey, should I reinvest that money in the stock that gave the dividend, or even in the portfolio that gave the dividend? So there's a lot of different thoughts on it. My personal thought, though, is I like cash to be cash. So if a company is willing to give me the money, it's on me to say, hey, let me reinvest it. I may want to take that dividend and buy a different stock with it. So that is what, by the way, in a Smartfolio is very likely to happen, because as the cash from dividends accrue, it will literally just buy the most least allocated stock to try to shore it up of whatever's in the Smartfolio. That I prefer than to just a simple reinvestment into the underlying stock that issued it. But that being said, I know we had a lot of calls for people to reinvest their dividends. And so I know a button is on the works to allow people to do that.
Very good.
Give them the choice.
Excuse me. And then, Nori, it sounds like you might have gotten your question answered, but for others who didn't see it, dividend paying stocks, like basically, are there any in the portfolios? Absolutely.
Absolutely.
As a generalization, the more conservative ones that we offer tend to have the most dividend paying stocks in them. But you could make a case, say, the red oil portfolio. I wouldn't categorize that as conservative, but by nature, a lot of those companies in that industry do pay a pretty nice dividend. So, yes.
The energy companies, yes, all Smartfolios have some dividends coming in. Aggressive Smartfolios generally have the least, because those are growth stocks. Growth stocks generally don't offer dividends. So the bottom line is, yes, Smartfolios have stocks in them that issue dividends for sure.
This is an interesting one. I feel like we got it a different way, maybe a couple AI circles ago. But Greg's asking if you have a Smartfolio for VC investments for crowdfunding, Reg A, Reg D, like iFlip. If not, what are your thoughts on the creation of one? I think I know how you'd answer this, but I'm going to let you chime in.
Well, chime in. I'm getting to chime in. I like to chime in, but I like the thought of it. The main demand, though, that we've seen is, and I kind of tend to agree with it, is smartfolios that are focused on dividends and especially high yield things. So we're now coming into a world where interest rates are probably going to shrink over the next few years, in which case money markets won't give you really what you might be have been expecting over the last, say, 6 months to a year. But that being said, so I focused on that. There will be a new Smartfolio that does that. There's going to be a couple Smartfolios, and we'll announce them as they come. You might get teasers from me because I'm the one building them. That being said, yes, I've had some people ask about the IPO market. So there are a couple of, for example, ETFs that specialize in it. I think Schwab has one, and iShares has one, maybe even Drexian. And I will look into that and see, for example, if there's any venture funds that kind of do things like that. And I can make a small note for what it's worth. And I haven't looked at it recently, but that's kind of the Kathy Wood product where she best tries to invest in all the what she thinks is the highest growth products out there. And but right now, prior to her, she was before the forerunners of some ETFs that are now doing just that, investing in the IPO market stocks, see if they can create an ETF where the fund buys them. So yes, my thoughts on the creation of one is yes, it is something that is in the drawing.
Very good. I'm going to skip a little bit, Steph. So not necessarily a question. So it's the same as it was prior to Apex. The point that I was making that maybe got confusing was when I talked about a manual position. You still have cash in your Smartfolios likely at all times. The only thing we changed, we didn't show you how much, or we don't show you how much cash is in the Smartfolio anymore, at least for the time being, because we got enough feedback that it was confusing to people. For instance, if they saw they had $1,000 in cash in a Smartfolio, they thought they could invest that into other things, and it just got a bit wild. And anyway, to keep it simple, we just took that away. But I promise the dividends are still going into there. You can look in your activity screen, and you'll see. Like, I know a lot of them in my account the past couple of days paid dividends. I want to say Energy Transfer. I want to say even Apple paid one last week. I could be wrong on that. But I saw a handful within the last week or so. So you should see some there.
Apple did. Yeah, and keep in mind when Lee earlier showed you the buying power, that's the buying power of cash that has not been have either bought a stock manually or been invested in a Smartfolio. But all Smartfolios have a level of cash in them as well. You don't see it, but it's there. And it does show up, though, in your total account value. The issue is that before, when we had cash inside a Smartfolio, it did do exactly what Lee said. It confused people, saying, well, I have cash there, so I should be able to invest that somewhere else. But you can't. So one major difference, and this is really noteworthy, of what Flip Investor does is we offer Smartfolios, or literally a portfolio inside of an account. So you might have 3, 4. I've seen people with 6 Smartfolios inside their account. And they might say they had $100,000 and they invested $15,000 in 6 of them. So that means 90,000 was in Smartfolios, and there's 10,000 cash. The 10,000 cash would show up as buying power on your main screen. But the other the Smartfolios might also have some free cash, right? Because we're not always in a stock.
Right.
And also a dividend may have occurred, and the dividend is in there as well. So the one thing you know is true is the account value at the top left. That value is true, always. The issue is that when we do the accounting on Smartfolios, there's a lot of dynamics behind the scenes. And why is that? Because a lot of the Smartfolios have the same symbols in them. So for example, Apple could be in the balanced and the aggressive at the same time. All Plains American could be in the balanced, the aggressive, the red oil, and the conservative. So when you see things like this, now we say, well, the account might have 20 shares, but 5 shares might be in one Smartfolio and 4 in another and 3 in another and 3 more in another. It becomes a little bit confusing. So that's one of the things that we're trying to kind of iron out so that there's complete clarity where all your money is within each Smartfolio and overall. Overall is not the issue. It's the Smartfolios because they're dynamic. They're in and out. It creates issues of managing the true value of buying power inside your account.
Yep. I think this is a good question. I'm going to take it maybe a different way. But Zung, so you make a good point about dividends a lot of times being under $500. So the $500 minimum on a portfolio is per portfolio. So say you had $1,000 in conservative and you got a handful of dividends there, even if they were only $10 or so, that could reinvest because you've already satisfied that $500 minimum. Now you might get $1 of 9 different stocks or something like that.
And that's, by the way, one of the problems. So it doesn't need to accumulate enough money. It just needs to go through the rebalancing period. And the rebalancing period is something that is a little bit subjective, but it won't be. It's going to be a fixed time. And the question is, what is the most optimal time to do that? Rebalancing means put your cash to work that has been accumulating inside the Smartfolios. So one of the things we don't want to see is having a lot of activity in your accounts because you have, say, $10. Well, how many shares of Apple can you buy at $10? Apple's now a $226 stock. Well, if I only have $10, I'm going to buy 0.02% of a share. And so I don't want to have all these transactions of fractional shares.
Yep.
And it makes no sense. It just makes no sense. This is a fad that occurred when stocks were being able to purchase fractionally. And it does create a lot of confusion. I mean, the average value of accounts at Flip is not like Robinhood. It's much, much higher. There's a lot of invested cash from people that it's very confusing to see. Why did I buy a tenth of a share yesterday and another, 2% of a share, the day before? It's just too much, and it makes no sense. So we're trying to become wiser about, what kind of a fraction do we really want to buy?
Yeah, it is hard to fathom the full shares, at least for me. Maybe not as much for you, but I remember earlier on when, we had, forget the portfolio, but Amazon was about 3,000 a share before it split. And, we had minimums that were $30,000 for some portfolios because it was the way it had to be. It's a little more convenient now, but your point is very valid. You don't want to be buying 0.005 shares of stocks every single day or anything like that.
If we can rebalance doesn't mean we should.
Right. Lisa, and I hope you can hear us all right, Lisa. It sounds like you might have been having trouble hearing one of us. But the short answer to your question, yeah, you can absolutely invest into Smartfolios. So regardless of your account type, you have all the same options. You can use the Smartfolios, you can buy a stock manually, you can do both. In all reality, most people come to us because of the Smartfolios. If they want to And a lot of people like to buy and hold, but if you want to trade, we're definitely not the spot to do it. Most people like the set it and forget it nature of what we do. And, just whether it's your recurring contributions, whether it's just putting a lump sum in, have it in a Smartfolio and not really have to think about it, I guess.
And that's, I think, another thing about Flip that I think is valuable is a lot of people I've noticed on the retail side, they really don't know what to buy. And these are people, in many cases, that are extremely sophisticated. They buy what they hear about. They buy a stock that a friend told them about, a tip, or they saw something in the news and they buy that stock. And when people are buying stocks based on those kind of decisions, it's just like gambling. It's like, oh, I heard a horse is going to pay at Belmont. It's in the third race and it's the third horse. And we got to go for, Crypto King. And we're going to bet on that. So you call in your bet. That is a tip. And what we do is we find the symbols to trade based on the science. And then we use a different science to figure out how to trade them most optimally. And very few other managers, if any, do that. And because it's just too hard. It's just too difficult to manage things that way at the level that you can have them manage that flip. So what we take out of it is, hey, what do you choose? Well, you don't know what to choose. Most people don't. So go to the aggressive. If you want to be aggressive, the stocks in there are the ones you would probably want to choose if you wanted to invest aggressively. And the same thing is true if you wanted to invest conservatively in the conservative portfolio.
Perfect. I'm just going to do a last call for questions here. Boris, if you're still here, the short answer is yes. We iFlip can't do any, I'm going to exaggerate. If you work for Amazon and have a 401k there, we can't take that. We don't have any 401ks set up outside of the self-directed ones. So in short, nothing's changed there. And then Bobby, and I don't know how else to say this, but I just took a brief look at your account. In the Smartfolios, like you saw, a lot of dividends were paid around, the 15th or so to the 19th. That cash from those stocks that were in, say, the aggressive portfolio or the conservative portfolio, you're not going to see those dividends in your buying power because they're in the Smartfolio itself. So it's not that it didn't get paid. It's just that it's in the Smartfolio.
And you can see that you got paid in your activity.
Yep.
Generally, here's another thing. When a stock goes ex-dividend, I've seen many stocks, it might take 2 or 3 weeks for them to actually pay the dividend. When you do see, like in your case, somebody got paid on 8/19, that was yesterday. Even if it showed up today, it will not, like Lee said, it will not show up in your buying power on your homepage. However, that small difference is inside your total account value. And if you go to activity, you should see that you were paid.
Yep. And maybe to explain the other side of it, why I think it's a good idea to have it set up the way that we do is, we don't want someone to have a year's worth of dividends just sitting in cash in their account. That if extrapolate that over years, you could have a serious amount of cash just sitting on the sidelines that never has the opportunity to grow or to work for you, quite frankly. So that's maybe a little bit, at least my perspective of the ideology behind it.
Yeah. And here's a little history behind it. Mutual funds were the first products to really come out and be shown to say, hey, this is a way to invest. And mutual funds had 2 things in common that they did is they reinvested all dividends, because what you're owning is what they call a NAV, a net asset value of the total value of the fund. And the mutual fund product started, I think the first one was in the 50s. And that was all that was available then. Then ETFs started to become very popular in the 90s, in which case ETFs also pay dividends internally. And those dividends, though, are paid into an account. They are not reinvested inside the ETF. The ETF pays them out to the account holder. So ETFs don't pay dividends directly. They just give you the cash. Mutual funds did that. The problem is the mutual fund industry was the robber baron of them all. The reason is because historically mutual funds, they charge so much for their service, and generally the worst managers always are managing mutual funds. They're not incented to go trade at Goldman Sachs where they get a percentage of the profits. So mutual funds are kind of on the way out. They're still a huge part of the investment world, but they are on their way out. They are just too expensive, and the dividends that they reinvest, frankly, you would be wiser to have them come out of the mutual fund and use them yourself and buy an ETF with it.
Yep. And maybe my last question, I got a text about it, back to the covered call Smartfolio. I don't know if you can or want to share any of the tickers on there. It sounds like we have some people that are familiar with them.
I have no problem, because once we have it, once you have them, you're going to see them once they're there. So these are some of the tickers. If you can take them down, write them down, look at them. So let's take a look at one. You'll see that here's the case of what we did. If you buy, even in January when I started this personally, I bought something at, say, in the $18 range. It's now $16.50. So I might have lost $1.50 on QYLD, right? And that's the NASDAQ covered call. But the dividends, if I added up all these dividends, which are, since I bought it in January, here's 18 cents a share, 18.8 cents. Here's another one, 16.5 cents. Here's another one, 17 cents. If I added that up, all of those dividends up, it more than makes up for the loss in price, right? So I might have lost maybe $1.20, but if I add the dividends up, I might have made 20 or 30 cents. And if I made 20 or 30 cents total, then I got 30 cents on whatever I got per share. So 30 cents per share divided by $18, say $18 a share, you can do the math and you'll see that how you can make 7.5%. So if you guys want, write down those symbols. You could create custom portfolios and do it right now. But some of these symbols may not be in the Flip universe yet, but they might, most of them, I think 3 of them are. And the other ones we're adding. So here's BitO, by the way, here's the one on Bitcoin. So this one was bought early in the year at about 23. I remember it was about 23.40 or so a share. It's now at 20.60. So I'm down about $2.80. But look at the dividends I get here. 54 cents a month. A month. So if I just took 54 cents a month and just assume they were all 54 cents, they're not. That means that works out to be, last I know, it's about literally $6 a year on a $20 stock. $6 on a $20 stock. That looks like 30%. 30%. So I might have lost $3. But I made 50 cents times 6. Well, actually 7 now. So 50 cents times 7 is, I made $3.50, but I lost $2.80. I made 70 cents. That may sound like a little, but it works out to be 7.5% for 6 months. Maybe. Right. So that's interesting to me, and it should be interested to anyone listening.
Yep. I would just say the only thing I would add to what you said is I would prefer to take the easy button and wait till the Smartfolio's out and it's already built for me. Yeah. But each their own. I think go ahead.
Before you quit, Lee, I will provide an analysis on that so you can see. It's a simple little spreadsheet of just looking at what I bought, and I can show it inside of an account, and I can show the dividends when they were paid. I can do a thing to convince someone to say, here's what someone did over 6 months. And just so you know, everyone, I generally test all Smartfolios myself personally before they're made. I generally do that. And why? Because I don't want that to be offered to someone that I feel a responsibility to, even though everybody on that in our platform chooses for themselves, self-directed. But if you make a strong case about how something looks and somebody who built it explains it to you, it should have more value to someone.
Perfect. Sorry, I was just responding in the chat to someone. Yeah, so I mean, gosh, a lot of exciting things. It sounds like a lot of new Smartfolios coming as well. So we'll, I think, wrap it up there. I said at the start, but anyone who wasn't here right when we got going, we'll be off next week. And then September 3rd, a couple days after Labor Day, we will be back here for the next AI Circle. And the next one after that happens to be exactly 2 weeks later. So until next time, have a good rest of your night. Enjoy the rest of your weeks, and we will see you guys back here in a couple weeks.
Yep, and may the market melt up further.
Yeah, just keep growing.
Thank you, everyone. All the
See
best.
you guys.